Welcome to this video today, which is on March the 19th. We're on Tuesday. In today's video, we're going to be looking at our favorite trade setup. Now, in terms of this trade setup, we're going to go through the logic of it in a moment, and we're going to be looking at it in relation to GBP USD, which I've obviously got on my screen. Now, in terms of the pound, we did see a big move to the upside here, and now the rally has ended and we're moving to the downside. We think a major trend change is about to be confirmed. Pound has limited upside and a lot of downside. We'll draw our levels of entry, stop and target in a moment. But first of all, I want to go through the logic of the trade. I want to start with speculative positioning. Now, in terms of speculators, we can see here on this chart, speculators built up their biggest long position in the pound since 2007. Now, this data comes from the CFTC. Now, this is the Commitment of Traders report, which is our favorite sentiment tool. It's totally free. Anyone can use it. And what it's showing you is actual real money positions in the market. And obviously on the right here, you can see speculators building up a really big long position. Now, regular viewers will know, this is last year when you had a similar size spec long position, slightly smaller. Pound actually fell 1,000 pips shortly after that position hit its peak. Now, could we fall 1,000 pips this time? I'm not that ambitious in terms of pound downside, but we've certainly got a lot of potential downside. I'll go through my levels, like I said, of entry, stop and target in a moment. Now, when we're looking at the CFTC net traders positions, or the COT, we want to see what large speculators are doing, but we want to see what another group is doing against them, because they're going to warn us of when we can go against the speculators. Now, that group is the commercials. Now, in terms of large speculators, just big managed money, they can be right about long-term trends for a considerable period of time, but they tend to always get hit at big turning points. Okay, commercials tend to be right. Now, in terms of large speculators, their motivation is obviously making profit. Commercials, they're not interested in making profits. They're hedging cash positions. They don't make or lose any money. So if they move their positions aggressively, that means that in this instance, the pound has overshot fair value to the upside. So we're always looking at the divergence between the two groups. Now, in terms of here, you can see we break above the black line that I've drawn. The previous peak last year was back here. We double top and then we see a massive move to the downside. We've got a bigger spec long position. This time we're already seeing some downside. We're looking for hopefully a lot more. Commercials have dropped heavily short against the speculators. Now, in terms of the sentiment towards the chart, we want to know why speculators are so bullish of the pound, and could their view be wrong? Now, in terms of our view, we do think the speculators' view is wrong. We think good news is in the price of the British pound. Those speculators are going to get hit on stop and hopefully power a big move down in the British pound. Now, in terms of this pair, we've got some key events coming up. We've got UK inflation tomorrow, which I'm just going to look at in a moment. Also, we've got the Fed in relation to the USD, and we've got the Bank of England on Thursday. So let's just do a quick summary of the fundamentals, and then we'll do a levels of entry, stop and target. Right, tomorrow we have UK inflation data. Now, we're looking hopefully for a number around forecast or a miss, i.e. inflation to fall quicker than the market expects and then start to really take out speculators on stop. And I'm just showing you a few charts in relation to inflation. UK natural gas prices, if we look at them since last year, they've come down significantly. They're a significant portion of inflation. Okay, now in terms of another big problem in the UK, it's been UK food inflation. You've got the CPI, basically in orange. This chart's from ING. It's moving nicely to the downside. And on the other side, producer price index, which will feed into CPI, is also moving nicely lower. And then we've got some key groups here. Inflation basically moving to the downside. Now, another focus for the Bank of England is wage growth. They want it to moderate. Obviously, high wage growth feeds into inflation. It has turned down. This is ANZ Bank's prediction for it to go down further. So yeah, we want to see a miss tomorrow. Something around forecast isn't going to give the pound much strength. That's already in the price. Now, we don't have the Fed tomorrow. Now, the market looks for the Bank of England to cut rates in August, but the Fed in June. Now, let's look at inflation in the US. It isn't falling. This is producer price index, which feeds into CPI. It does fall nicely there, comes up, down, moving back to the upside. CPI, consumer inflation is broadening. You can see it's going up here. Okay, Lombard's Blitz says if the data keeps rolling in like this, it becomes increasingly difficult to justify a preemptive rate cut, i.e. a cut in June for the Fed. I just think, market focus on August for the Bank of England and June for the Fed doesn't add up to us. Okay, now, in terms of a good quote in relation to the British pound, it's here, which is my daily market update. The only question is how long the pound strength will last. Well, we're already seeing some downside at the moment. It is still rather shaky strength. It is not like the USD strength of late last summer, which was fueled for months by strong data and an equally hawkish Fed. There isn't strong data in the UK. Guy concludes rather it is a fragile little plant that could break again in the face of headwinds, says from Commerzbank. So we've got inflation tomorrow and the Fed. I'll be doing a video in relation to the Fed tomorrow with various pairs. I'll include the British pound. On Thursday, we do have the Bank of England. We're looking for the Monetary Policy Committee to become more user-friendly to rate cuts. Now, in terms of the British pound, so we'll go here, make it a bit bigger. There we go. This was our view yesterday, testing this support level, which is now breaking. We've actually come in at 127.80. Now what we're going to do is do the chart and levels for today, which will be relevant to anyone wanting to get in to this trade as a new position. So right, let's do our levels of entry, stop and target. Right, in terms of levels, yesterday my view was to have the stop. Sorry, just get a line back behind this double top here I'm highlighting. I don't think the stop needs to be back that far now. I think the stop could be behind the 128 level. So tight behind the round number, okay? Behind that tail, okay? Come down, okay? It's a sell for fresh positions right now, in our view. There's a resistance level here, trajectory, then the big 128 level. Hopefully you get a weak close and we can bring our stop down. Now, in terms of targets, due to the size of the COT net traders positions, I think 124 will be the first port of call, hopefully, and then 122. If we look at speculative positioning, okay, here's where speculators really piled in long. You're seeing some stops get taken out, but I still think there's a lot of speculators long of the pound and looking for plenty of downside. Now, in terms of, if you're coming in fresh, I think it's a sell. And my levels, if you want to have a look at them, are these. Sorry, I'll make that a bit bigger. And also I've got a re-entry here as well. Sorry, let me just get this to my font. Okay, so 127.18, we're going to be tight behind entry at 128.20. That applies for fresh positions in our view as well. Targets, if we were stopped out, we would sell at 127.80 and then stick the stop a bit further back behind the 129 level. I'm not anticipating a big rally, but you never know, anything can happen in Forex. I'm hoping we get a nice weak close today and then we can bring our stop down even tighter. I don't know this stage obviously what price action's going to do, but if we really got a nice red on the move, I think we might be able to bring our stop in behind this level here. So it'd be something like 127.70, something like that. But we'll see how we go today. We have got inflation tomorrow, we got the Fed, then we got the Bank of England on Thursday. So I'm looking for the pound obviously to continue to the downside. We'll see what happens and we'll update this position. I should do a general one tomorrow in relation to the USD, so we'll look at it then, and I will be moving back to doing my weekly Forex forecast so we can look at it again at the weekend. Now if you want to learn all our trading techniques, see our COT Net Traders positions analysis and also our daily technical sentiment analysis of 14 pairs, you can go to our website, link beneath this video. But that is now the video for today. I hope you found it useful. Thanks for watching.